Hello, everybody, and welcome to this pre-seed analysis heading into the November 2025 slash February 2026 sitting for the CIMA SCS exam. So the case study we're going to be looking at is Cewmlator, so all about electric vehicles. So my name's Stuart Murphy. I generally find this might be the first recording that you've watched with me in it. So I just want to say welcome along to VIVA and congratulations on getting it this far. So you're almost there. You're almost SEMA qualified. One more exam and you'll be done. So let's get to it and let's get you through this one. Looking forward to working with you to get you through this exam. So before we get into it, I thought we'd just talk a little bit about what to do when you're reading the pre-scene. So some do's and don'ts. And hopefully you've read it at least once at this point before you're watching these recordings. So just accept you are going to have to read the pre-scene more than once. So do read it more than once. I mean, you don't have to go nuts. I would say like once a week, so, you've got about usually at this point 6 to 8 weeks before the exam. So once a week, you're talking about 5 or 6 times you're going to go through it. And you've already gone through it once, so 5 more times to go. We're going to go through it again in these recordings, so that's 2, so then just another 4. So you don't have to read it like hundreds of times, but just a few times. The first time you've read it, so you probably just read through it, trying to see if there was anything in there. This is the first time you've read a pre-scene for the case study, for the strategic case study at least. So, you weren't necessarily sure what to look out for. I recommend next time you go through it, you're going to do an active read. So what I mean by that, so try and maybe pause at the end of each paragraph and just ask yourself, okay, why would the examiner include that? Is there any models or theories I'm familiar with from E3, P3, or F3 that they could be sort of setting up that I might have to use in the exam? I mean, generally, I said here about creating summaries. If you think about the big models that could apply at this stage, I think SWOT's a good one to do. So, maybe pause it after each paragraph and think, okay, is that a strength? So there's something that Cewmlator's good at. Is that a weakness, something they're bad at? Is it something in the market or the external environment that could help them, opportunity, or could hurt them, as in it's a threat? So a SWOT would be a good one. Other ones you could think about would be, say, a five forces, a pastel analysis would be good at this stage. Um, and then you could think about just sort of a general summary of key strategic issues because you might come up with stuff that you think, well, I think that's important, but I can't quite see where it's going to fit into a particular model. So just keep track of that. So you might want to have a few, I think like a few Word documents on the go. So I'd have a document for like a pastel, a document for five forces, and then a document for just kind of other where I can just sort of put some thoughts in there. And you'll find by doing that, you'll learn it by going through it a few times and just repeating these kind of points. Yeah. So use it as a guide for your industry analysis. So as you're going through, you're going to try and fill in the five forces. For example, there might not be a lot of information on one of the forces, so you can go, okay, let's go and see about the what that's like in the real life, okay? Or pastel, maybe there's not much in there about the legal risks. So you're like, okay, again, let's go and have a look at what that's like in the real life. So um, the chances of you spotting the real life issue that the examiner is going to maybe bring up in the unseen, or it might even be something the examiner's made up, are very unlikely. But if you have got some things in there, at least you've thought about it ahead of time. So if something similar comes up in the exam, you've already got a few thoughts around it. You're not having to come up with stuff on the fly under that kind of time pressure in the exam. And I find that's generally a big struggle, for us accountants. Like innovation, imagination doesn't tend to be our strong point. So under the time pressure of the exam, it's very hard to come up with ideas. So if you've got some more ideas going into the exam, you're really going to save yourself a lot of effort, stress, and energy in the exam. And then you can sort of focus on really explaining those ideas really well. So it's a good approach to take to sort of think about, okay, how could this come up in the exam and what would I say about it if it did? And then you've already got those kind of stock ideas in your head. Um, a good answer, right, in the strategic case study will have three things generally. So it will have a bit of the pre-scene, a bit of technical language and a bit of the unseen, right? So that's what I tend to look for a good quality answer. So a bit of technical language. So try and use some of the knowledge or theory we've learned on E3, P3, and F3 when you're answering a question. The unseen, obviously, you want to try and use a little bit of the scenario you get given in the exam, and then it's great if you can bring in a bit of pre-seen. So I think a good approach actually is, picking some things from the pre-seen, the case study, that are quite widely applicable. So, for example, like the mission statement or the values of the organization are good ones to have in your back pocket because anything that comes up, if you're having to analyze or evaluate it, you can be like, well, this is either moving us towards our mission or taking us away from our mission. This either lives up to our values or it doesn't, it conflicts with our values, sort of thing. So if you've got those, you can kind of bring them into a lot of different kinds of answers. So that's a good approach to take, I think. So as you're reading through again, actively reading, thinking, is this something that's kind of pretty much fundamental to Cewmlator? Because if it's fundamental, then it's going to have an impact on any kind of strategic decision that we're likely to make. So don't try and memorize the whole thing. Unless you have what do they call it, a didactic memory, a picture, photographic memory. There you go. So, ironically, I couldn't remember the phrase. So don't try and memorize the whole thing. It is no point, really. It's unlikely you need the whole thing, and you will have access to it in the exam. So, if there's something you really want to get, you can go and find it. If there's something I think like a good example of this would be the names of all the board members and all their backgrounds and things like that. I mean, if you can remember that, fantastic. But if I was in the exam and I needed that for some reason, I just jump in the precinct quickly and find it. I won't remember where the information is to save myself a little bit of time. So, like that's a good approach, I think. If there's something that's really detailed and you think I'm not going to remember all of that, we'll just learn the location of where it is in the case study, and at least then if you have to go get it, you're not going to take ages looking for it. And then I would just say as well, it's really tempting and very common to get excited about the particular industry. So, I wouldn't be surprised if a few people go and buy themselves an electric vehicle after doing this exam because you get really into it. But you do not need to go and become an expert in the industry. Said for me, I think if you have any gaps in those kind of models that we apply, the big environmental analysis models, then I would just go and try and plug those gaps and generally know a little bit about the EVs, but like I said, the chances of you spotting the thing that's going to come up in the exam is really unlikely. So do a bit of industry research, but don't go too mad. I think you're better off spending a bit of time topping up some gaps in your technical knowledge, just in case that's the thing that comes up. You don't want to have that gap kind of exposed. You want to be able to talk about it a little bit. Okay, so that's a bit of the setup for how I would read the pre-scene. Okay, and then just a little bit about the introduction at the start here. So obviously this is Cewmlator. I'm just mention the introduction here. So this is pretty boilerplate. I know this might be the first strategic case study that you guys have seen, but I can tell you from experience that this is all very, very sort of standard fare. So, the companies are generally quoted. You get given a little bit of information about the background. So we know they manufacture electric cars. You're a senior manager in the finance function. You report to the board. I mean, that's like pretty much all they do is change the name of the organization in that sentence each time. And then you're in Duxland, which uses D dollars and it has a well-regulated stock exchange, and they put them together in accordance with international accounting standards. Again, pretty much the name of the organization, the name of the country, and the currency. Those are the things that change in that particular sentence each sitting. So just, I think it's worth thinking a bit better context here. So if you're quoted, you've got greater access to capital. So, one of the, if you look at the I can statement, it's something like I can recommend sources of finance. So they're quoted so they can go out and sell some shares. They normally have an enhanced reputation. So, if you, like I found, I used to work at BA Systems. If I tell people I work at BA Systems, they've heard about it. They know it's like a FTSE 100 company. Like, oh, that's a big company. People just think better of that organization because they're listed. However, there's some negatives. So always, I think with strategic decisions, it's good to be able to argue the toss. What's good about it? What's bad about it? So pressure from shareholders. So if they did decide they were going to take a diversification strategy, for example, from Ansos Matrix, think about the stakeholder reaction. Shareholders might be like, well, that's a bit scary. I don't want you doing that. I bought shares in an electric car company. I don't want you going into solar panels or whatever they decide to do. And then increased regulation. So decisions have consequences. It might mean that you're breaching the listing rules. In terms of like again, big picture stuff for us as a senior manager, right? You're not going to get bogged down in the detail. So I mean, some of the things that come up in the case study, like they talked about the different trim levels of the car, and you think, okay, that's kind of interesting, but that might be more like the management operational level kind of decisions. Big picture, we'll be looking at whether we launch a whole new product, whether we decide to develop a hybrid, that sort of thing. So we're going to be looking at like long-term decisions. You'll be expected to lead as well as manage, so there could be ethical questions coming up, and that's a good example of sort of demonstrating leadership is saying this is the right thing, even if it's the unpopular thing. The detail, the information that you'll be looking to provide to the board is going to be highly summarized. So these are big picture people. They're not like high detail people. They might like to know the detail, but it just would be overwhelming for an organization like this. And then you have to think about the market and the external factors, not just internal. Okay, so anytime we're reading through this, we're thinking big picture, summary, we're thinking about long term. Okay, so if this carries on, so what kind of thing? And we're thinking, okay, how does this relate to the market or the external environment? In terms of mentioning it's a well-regulated stock market, so one of the things they could bring up is this idea of efficient market hypothesis. So the whole thing is like, do share prices respond rationally? And you have weak and you have strong. So weak is we just react to all the stuff that was historic information. Strong is all information anywhere that's known is reflected in the share price. Most markets in the real world, and I would imagine in Duxland in this case, will fall into the semi-strong category, where they will reflect the publicly available information. So not just the historic information, but also like if one of the competitors to Cewmlator, like Atom, was to launch a new car, then the market's going to think, okay, well, what potential impact could that have on Cewmlator? And so then they might sort of try and think about the future value of the company. So it's not just the historic information, it's publicly available information, and then people can use that to speculate as well about the future. And obviously, I think if the future's bright, share price goes up. If think the future's dark, then the share price could go down. Right, so I think that sets us up quite well for going through the pre-scene. I'm going to stop the introductory video there. I'll see you guys in the next one. Hello, welcome back everybody. Okay, so in the previous video we ran through the introduction. In this case, we're going to have a read through the electric cars section here. So again, pretty standard in terms of case study. We generally find that the examiner likes to give us a little bit of background. And as I mentioned, I like to sort of pause after each paragraph and think, okay, why would they say that? How could they bring that out in a question, or can I relate that back to any particular model or theory that I've learned from E3, P3, and F3? So yeah, this was kind of interesting. I didn't know this. I don't know about you guys, but so electric cars became available at the end of the 19th century, and actually they lost out at that point to the petrol-powered cars. That was kind of interesting because they had greater convenience in terms of performance and range. So one of the things that you'll note as you read through the pre-scene is that these ICE cars, internal combustion engine cars, are basically a substitute for electric vehicles, and so that would I'd put under the threat of substitutes, right? So it's like you know I think about with the five forces, sort of streaming, the streaming industry and the cinema industry. So obviously cinemas are losing out to streaming at the moment, aren't they? It's like I could go to cinema Or I could stream a movie. So streaming is a substitute for going to a cinema. It satisfies the same need, but it's a different industry. Why are they losing out? Well, kind of actually similar. So greater convenience, really. Like I can watch a movie in my home and I can watch it anytime I like, whereas cinemas have set times and you have to go to the cinema and watch it, and then you have to watch the whole thing. I can't just pause it halfway through if I want to go and get a cup of coffee or popcorn or whatever it is. Threat of substitute. So there's still that threat really from the internal combustion engines. Then they mentioned about these forklift trucks. So they found some purchase in that industry, which is kind of again kind of interesting because they're indoors, and so you wouldn't want all these like nasty fumes indoors. So I was thinking about, okay, well, is there any other places now that we are trying to limit emissions? So city centres are a place where we want the air to be clean as well, and so I guess it's kind of similar to the inside of a warehouse now. We want the emissions to be low. So I thought, oh, this might be a product or market development opportunity for them. So off possibly looking to get into city centre buses, so that it doesn't mention they do any kind of commercial vehicles. So this would be a bit of a, possibly even a diversification strategy, or just providing some transport solutions. Because I think I did notice that in their mission statement, it doesn't actually say cars. I think it says transportation. So they're kind of broad. So this wouldn't be outside of their mission. It mentions here the governments have committed themselves to reducing emissions from all sources, including road transport, and many have threatened to introduce legislation that will forbid the sale of new ICE cars after a specific date. So again, I'm thinking, okay, how does this apply? A bit of pastel here. This is a political thing. So the governments have committed themselves and threatened to introduce legislation. I think some of them have, but not all of them. So that's going to take away this threat of substitutes, isn't it, um, for the electric vehicle industry. ICE cars aren't going to be a substitute anymore. So then they're going to be kind of competing with each other, and then we get into the hybrids, which we'll come on to. I also think, though, it's like give and take, isn't it? So there's positives and negatives. Nothing's just completely upside. So we've got to think about the threat of new entrants here. So we're going to make it kind of an attractive industry, aren't we, to be in? Um, yeah, and obviously it mentions later on that the ICE vehicle manufacturers, well, they can see the writing on the wall, so they might be tempted to like switch over to offering electric vehicles. So types of electric car. So we've got the BEV, the battery electric car. So these are recharged at charging points. Okay, again, I'm thinking about, okay, how could this come up? So that would be a key sort of supplier or strategic partnership. There might be an opportunity for Cewmlator to have a strategic alliance with a company that provides the public charging points. They might decide actually they want to just do it themselves. So we sort of call that forward vertical integration, and they could start offering them. We also find out later on that there's a sort of a limit on the availability of these things. So the companies will put them in the areas where they think they'll make lots of money and not so much in the areas where they think they won't make as much money. So I'm guessing like city centres are it's always going to be ram packed, isn't it, the city centre one? But am I going to put it in a rural area where there might be not be as much demand, and so it might not get used as often, but you still have pretty much the same setup cost, don't you? So what we might get into a situation is some sort of joint ventures on the table between us and maybe the other electric vehicle manufacturers, where we're going to set up a company that's just going to go out and install a bunch of charging points. Because if we put the infrastructure in place, we're all going to benefit. That's going to grow the demand for electric vehicles. It reminds me of when EE was created. So EE, I believe, was a joint venture between Orange and T-Mobile when 4G was introduced into the UK. So neither of them wanted to do this big infrastructure project themselves. So they then created EE, the joint venture. They put all the money, the staff into it, And then eventually, like, the problem I think sometimes with a joint venture, and this is something to keep in mind, if this does come up, is how do you get out of it? Once you're in it, you put all these resources in, how do you get out? So this is what happened is they eventually had to sell EE, and they listed it on the stock market, and actually it became bigger than either of them, and I think ended up buying the parents. So sometimes you can create your own destruction with a joint venture if it proves to be too successful. But yeah, I could definitely see something like that, being an option for Cewmlator. Yeah, I thought it was just kind of so the EVs can't be towed. So I thought, oh, that's a bit of a drawback, like if I got stuck somewhere and I was really wanted to get home, I don't really want to leave my car there. I want to know my car's safe on my drive. You know, if I can't get a tow company to come out, maybe I could just get my father-in-law. He's quite handy. He's got tow rope. He's got all sorts of things. Jump cables, etc. in his car. I just ring him and he tows my car back, and that's an option, isn't it? Whereas here, I definitely need to get the vehicle recovered, so there's like extra potential cost. Um, I also think, this is something to think about in terms of like roadside recovery. So AA and RAC and things like that, this is going to have a bit of an impact on them. Again, like how closely do we work with these people? I mean, I could see a question coming out where, AA or RAC or any other roadside recovery company is requesting information about the cars so they can then better plan for how they're going to deal with all of these broken down EVs in the future, sort of thing. And then it's a case of like, well, how much information do we share with them? Because it's within our interest that they have the capabilities to recover the cars, but then we don't want to be giving away our intellectual property at the same time. We don't necessarily trust them. So you could have a bit of a discussion about that. Range will vary depending on the size and weight of the car. So this is where you'd want to be putting our money really when it comes to research and development. So anything that reduces the weight of the car or the weight of the battery, anything that increases the capacity of the battery, anything that makes the battery smaller so we could squeeze more batteries into the same um, size would all be good things to be investing in, basically. So like this opportunity to invest in these, to buy a battery company that does these things might come up. Well, this would be a source of competitive advantage for us, wouldn't it? So then it would be a rational choice to do that. Um, again, this is I always find every case study I learn something. This is one of the reasons I like teaching the SCS case study. So I was learning about hybrids in this section, and I didn't really take too much away. This is the sort of thing I just tried to summarize it. So I was like, well, we've got the let me change my camera position. I'm hiding a little bit there, aren't I? So we've got the plug-in hybrids, so they're mixed, mainly combustion engine. We've got the hybrid, so there's no plug, and we get a few kilometers on our batteries. We've got the motor, I think it's like motor assisted, something like that, electric assisted driving, which they sort of say doesn't even really count as a hybrid per se, because it uses the battery so little. Um, and then we have our BEV, so our battery electric vehicle. So I would sort of think like once this legislation kicks in 2030, where they're going to be banning the ICE vehicles, this is going to be all our substitutes, isn't it? Because these aren't really the plug-in hybrid is probably the closest one that we've got. So again, it all comes down to cost versus sort of value perception. So I can imagine the problem is when they ban the ICE vehicles, are people going to jump straight to the BEV? If we imagine there's a spectrum of vehicles here, so we have our ICE vehicle, our motor assisted driving, then we've got our no plug hybrid, then the plug hybrid, then you've got your BEV. Are people really going to jump from this side of the market where they've got the ICE vehicle all the way over to a BEV? Maybe not, unless we can help them with that transition somehow. I think a lot of people are going to drive, go to the ME HV. So then our job is to try and think about, okay, well, how do we make sure we're not too much more expensive, and how do we sort of influence the value perception there? Because I think that's why people would do it. So, well, it's not that much different from an ICE car. It still uses fuel. It just has a little bit of assistance every now and again. It doesn't suffer from the range problems that BEVs have. It doesn't suffer from the fact they can't be towed, the battery degradation problems. So that's going to be, in the future at least, our biggest strategic threat. So ICE cars, excluding the MEV, accounted for 45%. If we did include them, the non-electric cars are 61%. So obviously it's a growing market for the electric vehicles, but we're not quite the majority. If you include the MEVs as hybrids, so there's obviously a debate there, then um, we are almost the majority of vehicles now. Just move my camera, sorry. Um, okay, so then I did a little bit of playing about with the numbers on this graph. So I was kind of trying to look and guesstimate where these numbers fall. So, for example, like this one, I think it looks like 1 million. It's not quite 1.1, is it? That would be about halfway there. So it's like 1.03, 1.04 million. Again, this is the sort of thing. It's like there's no point in splitting hairs about this. We're thinking big picture. So I had to play about with the numbers, and this is roughly where it came out. So we know that the non-EV bit would be 61%. We know that's 45. So this bit has to be 16. And then sort of based on that, when I got these numbers to roughly 45 and 16, I then calculated the other one. So the BEV is 19%. So that's about 1 in 5 cars sold in Duxland. So that's pretty good. 8%, so about 1 in 10. Again, sort of 1 in 10 for these two kinds of hybrids, so the plug-in hybrid and the non-plug-in hybrid. So we are, beside the ICE, the second biggest part of the market, and we are bigger than the motor-assisted hybrids. I could just see there being a question, something like, should Cewmlator expand into the hybrid sector? And then if they do, like, what kind of hybrid would we want to expand into? And so, this is a good example where what I find when you get these questions in the exam, you tend to have like a reaction to them, right? So you'll go, right, yes, they should, or no, they shouldn't. This is like a bad idea, basically. And I think that's fine, right? So you can have a reaction to it. But what I would do is I would then try to come back and go, okay, why did I think this is a good idea? So what's the arguments for? Why did I think this is a bad idea? What's the arguments against? And then I'll put my conclusion. It doesn't necessarily have to change your conclusion. That's fine. But when it says evaluate, you have to be able to argue the toss and then come to conclusion. So that takes practice, I think. So fine to have a reaction, but then come back and go, okay, right, I've got my answer, but that's only going to get me the last sort of maybe few marks of the question. How do I get the rest of the marks? That's where I have to argue the toss. So, this is one, I've given you this question here. There was no harm in you sort of thinking about this ahead of the exam. So if something like this came up in the exam, you're like, well, great, fantastic. I've already got an answer in my head for this. Can't guarantee you, right? I'm not going to say that's definitely going to come up in the exam, but something to think about. Okay, so I thought we'd do this as a separate video. I didn't want to make these too long, so I'm going to call this section there, and I'll see you in the next one. Hello, hello, welcome back. Okay, so we're going to talk through the shift away from ICE. So many governments, not all governments, have set targets for a ban on the sale of new ICE cars after 2030. So obviously that's going to help us deal with that threat of new substitutes, so a bit of help there. You could also talk about politics. I think that's something that is in at the moment, but there's still time for governments to change their mind, and sometimes they do. I can imagine that they might be tempted to push that target back, 5 to 10 years. So we could, think about the potential impact of that. Demand for ICE cars remains high, and there's insufficient demand for EVs to bring about a more rapid switch. So, yeah, again, I could see there's some pressure there potentially on the government not to make the change as quickly. And I think that would tend to be how they do it. I don't imagine they would just go, right, we're going to get rid of this ban altogether. They would just say, all right, well, we're going to make it 2035 now. We're going to make it 2040. Um, so what's holding up the change to electric vehicles here? So the purchase price. So batteries are very expensive. Um, we are told the price differential between EV and ICE cars has fallen, but it remains significant. So I guess one of the things we could do in this case is we could try and lobby the government to introduce some grants. There was a program many years ago now where we got a bit of money off that was basically funded by the government if you traded in a diesel car which is more than 10 years old. I think you got, it might have been up to it was 2,000 or 5,000 pounds off buying a new vehicle. And so we could lobby to get something like that introduced. That I think could potentially come up as an ethical dilemma sort of thing. So, discuss the ethics of lobbying the government to introduce grants, and you could argue, well, it's in line with the government policy. The current demand isn't switching over quickly enough. So, if the government does want to ban these vehicles and improve the environment, then offering the grants is in line with that. At the same time, you could say, well, they're interfering with the market at this point, and the whole thing, we have a free market economy, so therefore, if you're giving money to a particular section of the market, that could be seen as unethical, and it could be seen as sort of favoritism. I can evaluate strategic options. So the ICANN statement. I think these are the problems that we have at the moment. This is why people aren't buying our cars. So when you're evaluating strategic options, a good model is suitable, acceptable, feasible. So anything that happens to deal with these issues, so anything that improves our purchase price, etc., would be, improve the acceptance, right? So options that improve these would address the motorist concerns, and so therefore they would be high priority in terms of strategic options. So yes, that would be a suitable, acceptable, and feasible choice, basically. But you can come at it from a sort of stakeholder reaction, your customers. So here we get a graph. So EV price is compared to the equivalent. So in 2020, a popular model of EV was 75% more expensive, so almost double. And now the price difference has decreased to 26%. So you do find, I don't know about you, but like I wouldn't know how much more expensive an EV is compared to like the car I might be willing to buy. So this is sort of thing that we might want to mention in our marketing, because maybe electric vehicles are not as expensive as you think. Because this is like a fairly big change, isn't it, in a short space of time? So the market might not be aware of this. So that would be something I have in mind. This is a good example where I wouldn't expect you to sort of remember the detail of the graph, like how it's dropped. Um, Maybe the percentages would be good. We can see that there was quite a significant drop there in the first year, and things have slowed down, and there's been another drop. So, a lot of the savings happened early on. So maybe that goes against what I was saying there, that people do know it dropped quite significantly down to 40% more expensive. We've not made as many gains recently, but that's usual, isn't it? Like law of diminishing returns. But anything we can do to get that down, because if the purchase price of an EV is equivalent of an ICE vehicle and they're cheaper to run, then it seems like a no-brainer to switch over, doesn't it? So car manufacturers advertise the ranges of their cars on fully charged batteries, but the range can be affected by driving styles and road conditions. An electric car may be suitable for a motorist daily commute, but they could prove impractical for longer journeys. So I was trying to think, okay, how could this come up in the exam? And I remembered the emissions scandal where there was a few different car brands, I think Volkswagen in particular, had been cheating the testing system for this. So yeah, I can imagine the board of directors becoming aware that there's some engineers within Cewmlator who have come up with a way of cheating the testing system, and then it's a case of like, all right, do we come clean about this and do we recognize this as a potential issue? Because that was the thing with Volkswagen. It was the board of directors denied all knowledge of this, um, but it turned up to the engineer, and you could see for the engineers the ethical arguments for doing it. Because like, well, yeah, we want to the company to do really well because we work at the company, and so uh, they gamed the system and they could think, well, we'll do something bad because it's for the greater good kind of thing. Um, you do have to wonder, and again, this is where I think it could go because it talks about demonstrating leadership. If you've got engineers within your organization doing that, so like focusing on cheating the system as opposed to improving your product, then how have you, as the director, contributed to the culture of that organization? Um, Maybe, if nothing else, you haven't really been asking enough questions, have you? You haven't been like, how did you actually improve emissions by, 50%? That's like quite a significant jump. Whereas you might just go, oh, that's fantastic, we've done that, and then not ask too many questions. And because you might not want to know, deep down you might suspect something. Be like, well, if I don't ask the questions, you know, what do they call it? Plausible deniability. I don't know anything, so therefore I can't be held accountable. So you can see how a bit of ethics could come up there. Do we release the information? How have the directors led to this, potential scandal? Have they talk about tone at the top and culture. Motorists can install rapid chargers that enables them to charge their cars much more quickly. Rapid charger costs about $1,500. So, I think if we just sort of equate these to pounds, so £1,500 is, a good chunk of money, but it's not an impossible amount of money for people to find, especially if they can afford to spend a bit more on an electric vehicle. I was thinking, if you get someone to install a rapid charger and spend $1,500, when you think about bargaining power of customers, right? So bargaining power is about switching costs. So the harder I can make it to switch back to an ICE car or one of the non-plug-in hybrids, then the less likely someone's to do it. So, you know, if I get them to install a rapid charger for $1,500, they're probably not going to switch away from a plug-in vehicle now because they look at it as, well, I'm throwing away that $1,500. So they've created a bit of a switching cost there. So I thought that could be a good example of like related diversification, and actually we could even do it and make a bit of a loss on the installation of these things because we know that if let's say we include it as part of the package, like buy a car with us, we'll install a rapid charger for you. Yes, we might lose money on the rapid charger, but we're going to make more sales. So it's a bit of a related diversification. For motorists, the cost of charging an EV at home will be less than the cost of petrol or diesel for a typical ICE car. So, yeah, I'd be interested to know. Obviously, you've got to pay the $1,500. Now, to fill my car up at the petrol station, there's no upfront cost of that. So, again, it's like, marketing is about persuading people. So, it would be interesting to know, well, what would be the payback? I'm going to save money on charging my car at home compared to like filling up an ICE car, but how long is going to be the payback on that $1,500? So that'd be something we could potentially include in our marketing for this. So BEV and PEV cars are charged at public charging points. If you don't have any off-street parking. So you find those at car parks, motorway service stations, and other public spaces. So again, they're relating to supporting industry. Possibly, if we had a country we could expand into as well for accumulator, we could put this under a factor condition. How good is the infrastructure in that country? So it'd be like an advanced factor condition. If they don't have a good public charging network, then it wouldn't really make sense for us to pick that as a target country to expand into. They're usually more expensive than recharging at home. So again, there's a bit of an ethical thing to consider there, isn't it? So, if I'm, say I have a flat, because I can't afford to buy a house, maybe I even rent the flat, and I want to do right, so I'm buying myself an electric vehicle, try and make the ethical decision to support the environment, and then I'm getting punished because I can't afford a house. It seems like a bit could be seen a bit discriminatory, couldn't it? So these are arguments we could put forward to the government to maybe create more charging points and maybe try and standardize the pricing across the different charging points as well, making it more attractive to own an EV. So things to think about when we're lobbying the government. There's concerns about the availability of charging points, so that could put people off buying the cars, which is not good for us. Access can be limited in areas where none of the companies believe they would make sufficient revenue to justify the cost of installing. So this is one I was mentioning earlier about potentially a joint venture or diversification. So we work with one of our rivals to install these charging points because potentially we could both benefit from it. Um, and there are two types. We've got the slow and the fast, and the rapid or ultra charge. So again, maybe we come up with compromise, and we put slow/fast charging points in places to keep the cost down. 80% of BEV owners have home chargers. Okay, so that's good. Again, I think if we have, the more people we have who are home chargers, the more people are going to stick with us. So we want to get that 80% up. One of the ICANN statements talks about having strategic key performance indicators. I think this is a good one to keep an eye on. So the more people have installed these home chargers, the more we're like, are probably going to keep those customers. It's a bit like I imagine Amazon probably keep an eye on what percentage of their customers are Prime subscription customers. Because if you subscribe to Prime, you probably buy a lot of stuff from them, basically. So I'd see it as a similar thing. So you're a bit more, you've got a bit of customer loyalty there. There's a switching cost. Market segmentation and target market. So again, it might be the 80% are homeowners. So when we come to doing our marketing, we want to target people who are able to install a home charger because they're more likely to stick with us. Like if we win these customers to us, then that's better than going with someone who has to use a public charging point because it's very easy for them to get annoyed with having to do that and switch to a hybrid, right? Because they didn't have to outlay the 1,500 D dollars. So they might be our priority. That might have to be our target market. So we segment the market into people who own homes and like have the capability of installing a home charger, and we go after them with our message. Rechargeable batteries tend to degrade over time. So that raises concerns about the resale value for the cars whose batteries have degraded. Yeah, so this is something that would potentially put me off. I don't know about you guys, but if I buy an electric vehicle and then I'm not able to sell it on, because I often look at it, I don't know about you guys, but I think, well, if I buy myself a new car for £10,000 and I sort of run it for 5, 10 years, I should hopefully get at least £2,000 back for it. So the car hasn't really cost me 10, it's cost me 8, which it might not be a big difference, but that's 80% of the cost of the car. Whereas if I take the full hit of 10, then that's a bit different, isn't it? So R&D innovation again. I was thinking like sort of the golden thing here. I remember last time, I don't know if you guys heard about this one, but we had a satellites and the sort of the golden. What was it, the goose that lays the golden egg? The goose would have been a reusable rocket because the rockets kept getting thrown away, and like that's a big cost. Whereas if you could reuse it, you could save a lot of money. I think in this case, the golden the goose that's going to lay the golden eggs is if you can discover a goose that allows you to refresh your batteries, so some way of like maybe getting them back to maybe not 100% of the quality, but if they've degraded to say 40 or 50% of what they were, we can refresh them somehow and get them back up to like 80, 90%. Um, I was also thinking, like, I read about Rolls-Royce started doing this thing where they wouldn't actually sell the engines, like these aircraft engines, to the airlines. They would lease them. So Rolls-Royce retained the ownership of the engines because they thought this was better for the airlines because they don't have to outlay this big capital expenditure at the start. It's good for Rolls-Royce because they get steady income over a long period of time rather than get these big cash lump sums every now and again and having to sort of budget carefully. Um, and it also means they still control the engine, so they are then responsible for maintaining them as well. So they're getting the service income. I thought this could work well for someone like Cumulative. This is a problem, then why don't we lease these cars, lease, or even we could just lease the batteries. So we retain ownership of the batteries, so the customer doesn't feel like they have to pay for it and then lose the money. So maybe there's some kind of option along those lines. Um, if we did do that, then maybe we could find a second-hand market for them. So, like, yeah, we have the consumer lease the car from us, and then after 5 years they give it back to us, or 8 years, however long. Obviously, the longer they lease it for, probably the cheaper the lease we could make it. The shorter, the more expensive. And then we get these cars back, and it's like, okay, who might want to use them? Maybe taxi firms because they could just like plug in wherever they're stopped sort of thing and keep it charged, so the range isn't as important. The taxi journeys, they're not going to be doing the 300 200 mile journeys, are they? I mean, every now and again they might, but they could have special vehicles for that, because that's the problem. I mean, it mentioned earlier about the journeys, and it said a lot of journeys are short, and I would agree with that. Most of my journeys are short, but my parents live in Scotland, and when I want to go to Scotland, I just want to go to Scotland. I don't want to have to stop 2 or 3 times and spend 2 or 3 hours each time charging the car. That's where we get into this difficulty, isn't it? But taxi firms, they're not going to do that. So we could find, that was my initial thought. Maybe you can come up with a better example. I thought some other market we can sell these second-hand cars onto where they're not as worried about it, and then they can just run them into the ground. So electric car market. So we can see that it is growing. So it's been growing fairly steadily since 2018, and the BEV is the biggest growing sector of the market. So I was thinking, okay, again, how to relate this to Boston Consulting Group matrix. So here we've got we're hopefully in a star position. We have a good share of the market, and it's a high growth market as well. In terms of product life cycle, so we're still at the growth stage, which we're expecting sales to keep coming through. We should be investing in our marketing to make sure we're winning all the new customers coming through, especially with this sort of 2030 update coming through. That's really probably where we want to put our focus. The growth stage is also where most cars are. Um, uh, it's the industry tends to be the most attractive, basically. Okay, so that's a good point, I think, for us to end that video there. So we talked about the switch over to ICE and a little bit about electric car market. So we'll continue with about the electric car market in the next recording. See you in the next one. Hello, welcome back. Okay, so we are going to talk about the electric car market. We touched on this graph a little bit at the end of the last video. So saying, obviously in the growing segment of the market. So we're told that globally 17 million electric vehicles are sold in 2024, constituting 25% of new car sales worldwide. So we're in the growing sector of the market. Market share does vary between countries, ranging from 12 to 85%. So again, I was thinking this would be, a little bit Porter's diamond. So the market conditions. So obviously, where the countries, you've got 85%. Just move myself a little bit there, covering that up. So in the countries where you've got 85% of the market going electric vehicles, they would be attractive ones to go into. Again, it's always like pros and cons, isn't it? So it's great because there's obviously high demand for electric vehicles in those countries, but at the same time, you'd expect there would be some competition already established in them. The 12%, you could argue, well, there might not be the infrastructure there, but obviously there's lots of headroom to grow the business. So the global average battery tech. So we're expecting, this is one of the switching problems, isn't it? We're expecting the price or the cost of battery packs to come down. So we found out later on that it's when it says the battery, they're not actually just one battery, are they? They're actually built into the floor of the electric vehicle. So that's kind of interesting. And that makes it makes sense like why it's so hard to replace them. I must admit, I thought, you could really save yourself a lot of headaches with the whole charging thing if you could just swap the batteries out. So I'm just imagining, but I think in my head I was imagining like a normal car battery. So you literally like lift it out and then you stick it on a charger and then somebody puts the new battery in which is fully charged, and like that would really save a lot of the charging time. But yeah, later on in the articles we found out that's definitely not a possibility. You'd have to take the whole bottom of the car off and then replace it. So I just thought this is interesting. So there's a bit of forecasting going on here. So this is where they could bring in some of the forecasting techniques. So I'd love to know what these numbers are based on. So is this just sort of a time series analysis? So we look at like how battery prices have gone down over time. So we're just expecting this trend to continue, which may not happen. Was it a jury that came up with this, or a think tank? Or was this using the Delphi method? So, the Delphi method is more expensive because you send it to these experts. You have to get the answers back, then you collate the information, send it back to the experts, and see if they want to change their mind or anything. But the advantage of the Delphi method is you don't get the contamination. If you have a think tank, for example, where you have a group of experts all together, then they might end up just agreeing with the person with the strongest personality who's able to kind of like bully or argue everybody down. Whereas Delphi, everyone's a bit more independent. So you might argue you can get more accurate results. So it's like there's the relationship between like risk and reward. There's a similar relationship I think between effort and accuracy. So if you increase the effort, so it's more painful to do, theoretically it should be more accurate. If it's not, why go through the pain? But generally it is. So evaluate the method used, right? So I'd remind myself about those and be able to talk about the pros and cons. Risk versus uncertainty. I could see this coming up. So is this a risk or is it an uncertainty? So what's the probability of the battery price coming down? An uncertainty is an unknown. So it could be like, well, what events could happen that mean that the price of batteries doesn't reduce, basically. So I mean we know like with the global pandemic a few years ago, and they do give you like a statement at the start here saying, kind of ignore global events. So we're in this world of the exam. We're not gonna bring in COVID and things like that, but we can still think about it just as a thought experiment. Um, Something like that could happen, and then supply chains are massively disrupted, and the price of lithium, which is a key component, suddenly shoots up through skyrockets through the roof. So this is, if everything stays the same, but there might be some uncertainties, some unknown events out there that could cause this. So do we have any scenario plans? Like, what if this battery price doesn't drop? What will we do, basically? We're putting a lot of eggs in the battery price, but is there other places we could perhaps keep the costs down? And then we've got downside versus upside, here. So I think, well, upside, downside, everyone focus on downside. Well, we do anyway as accountants. We tend to be kind of negative. At least I am. I don't know about you. I'm always, if you ask me to point out what could go wrong, no problem. I can always think of those. If you ask me to point out what could go right, a little bit harder, not as optimistic, not the glass half full kind of person. But what happens if the battery prices actually drop further than we thought? Then what could happen is we could end up with an like lots more demand that we're not able to meet. So we might have to suddenly put like massively increase our production capacity. It might mean that lots of competitors suddenly enter the market because, especially the ICE ones, because they might be put off at the moment because they're like, well, there's no point in making an EV car because they're too expensive at the moment. But then if the battery price is half rather than just sort of slowly drop like they are here, they might go, great, okay, cool. Now it's worthwhile doing it because there's going to be a huge demand for it. So sometimes things can go better than you expect, and even that causes some potential problems. So here are our rivals. So we've got very similar market shares. So Atom, Dilson, and Cewmlator. I guess it's kind of similar to the at the moment. There's a few big car brands, isn't there? That people tend to think about. So again, Boston Consulting Group Matrix, we've got relative market share. I mean, theoretically, according to Boston Consulting Group Matrix, we are in the relatively low because we don't have as much as Atom. But that's one of the drawbacks of the model. I think I don't take that too seriously. I would still put us in the high market share category relative to everybody else. And then we know the market growth is high, so we're in the star territory, which is good. Um, the problem with stars is they will eventually fall to become question marks, cash cows. So it is kind of interesting to think, okay, once you've enjoyed this market growth and come 2030, I'm guessing most cars will be electric vehicles. What's going to be the next product, on the horizon? So this is what I mean by thinking long term. We're 2025 now, but we have to think about in the next 5 or 10 years, then this is going to be a cash cow for us. What's the next big growth area going to be for us? Okay, so good point for us in the video there. We'll do a separate video going through Cewmlator specifically. See you in the next one.